How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 44 to the Asian Session Library. Once again, with the same pair US dollar versus Japanese yen. On Wednesday, the 20th, March 2024, we had a successful Asian Session model. Let's walk through it together. As we know, we don't trade within this time period. This is the New York lunch or the dead zone, 12 p.m. to 8 p.m. No trading is allowed. However, we are looking to trade between 8 p.m. to midnight, New York Eastern Standard Time, Asian Kill Zone. Trading is allowed. So this is a live session, and this is a dead session. We're looking to find an intraday trade or a scalp opportunity during the Asian Kill Zone. So let's find how we look for those setups. So we're looking for all the buy side and sell side liquidity that forms within this time period. So this is a swing high formation that's unbroken. So we're going to use that. That's our buy side liquidity. We also have another swing high formation here. So that's our buy side liquidity as well. And the rest of these are either relatively equal highs, but if it's not a swing high, it's not really of importance or draw. You can see this swing low is already broken before 8 p.m. So we're not going to take this swing low. So we're going to take the lowest low that we have via 15-minute time frame that we have that closes on this candle as our sell side. So that's how I like to gauge that when I don't have sell side or buy side. I take either the highest high or the lowest low. So here we're taking the lowest low of the session. We also like to mark off the opening price of the session. Very important. Why? Because it's our overbought and oversold condition without any indicator. So that's 8 p.m. open. Anytime price is below this opening price, it's in a discount. Anytime price is above that opening price, it's in a premium. So if we're looking for any situation for a long, we're more than likely looking for the long almost all the time below the open. Anytime we're looking for a short, we're more than likely or almost all the time we're looking for the short above the open. So let's play it forward. Let's see what happens. So you see we get a purge right here. Price takes out that low. There's a purge on sell side liquidity. What I do at this point, I like to scale down to the 1 minute time frame. Now, this doesn't mean you can't use the 5 minute, 3 minute, 2 minute as your lower time frame entry technique, right? To go down and find an entry on the lower time frames. I specifically, this is just my way of going about it, right? My belief system, my ideology, my methodology. I like to go from the 15-minute down to the 1 minute. You may not do that, but I'm just showing the community what I do to find success. At this point, I'm stalking a long setup because sell side has been rated and we have buy side still available to us. So this could be a potential draw or projections on our longs. Doesn't mean price has to get there, but that is a potential draw where price is going to go. Let's go on the 1 minute. So we go down to the 1 minute time frame. And what we're looking for is a entry technique that forms below 8 p.m.'s opening price discount after taking out that sell side liquidity. As you can see, it's right here. We talk about it every single episode. It never changed. At least if you were here from the beginning, it has changed. But now it's simply a fair value gap that runs to a swing point. And that swing point needs to be inside the fair value gap. Can we see how we got a fair value gap here? And there goes the swing high. 1, 2, 3. The candle on the right is a lower high, and the candle on the left is a lower high. So that's the swing point between these two candles. Takes 3 amigos to do it. Price runs through it, and the swing point is left inside the fair value gap. It's not on the fair value gap start, origin, or its end, where it finally clipped off. It's right in between those two price points here. So I like that. I don't like when the swing point is on the start or exactly at the end. The same pip as the fair value gap start and end. It can't be that. It has to be inside in between that. This is where we're looking for our long setup. So we're reducing risk, right? I'm looking for a 1 minute entry. So in its nature, I'm already reducing the risk that I'm taking. So I framed everything on the higher time frame. Make this blue. We framed everything on the higher time frame, and then we went down to the lower time frame to frame this idea. So we're looking for price to trade back down into that fair value gap. There, now we're in long. So the trade would be live at this point. We're looking to go long and hold for higher price action. Let's see what happens. Price runs up. See if it gets us 15. Gets really close, I think, to 50. It hits 15 pips, or it does it. Double check. Let's measure this out. So it got us 10, right there. Around 10 pips, scale out. Pay the trader something. That's what always informed traders do. Pay yourself because you don't know the chances of price turning around. and you spent all this time waiting for this specific moment or this specific kill zone to get this entry, pay yourself that time. And 50 pips is here. So just it just yeah, it hits it. 15 pips. Yeah, just taps it right there. Let me just double check the price point. 792. Ah, by one pipette. It's off by one pipette. So it's 791 right there. So potentially maybe spread might have knocked your stop loss. I mean your TP, and you would have got that. But all in all, it's still a successful Asian session model. Once we get 10 pips, I'm happy. It's a successful trade. 10 pips, bank that, call it a done deal. And anything on top of that is just cherry on top. Oh, it does. Look at me, silly me. I didn't play it all the way through. You got to have more patience, and price continues to trade up higher. But notice as well, that same fractal idea is happening here. Look at this. It's that fair value gap. Where's the swing points? Right here. Or even this one too. Doesn't matter if there's more than one. Once there's at least one, it validates it. There's a swing high that's ran through. The swing high is inside the fair value gap. Look how price taps into that, and it runs higher. So, and it actually forms below in a discount too. And it also gives you 15 pips off of that entry. 16.9. So another feasible idea there. And if we continue to play it out, see what happens, you can see ultimately after that, we get stopped out. So that's why it's really crucial to pay the trader. Notice as well where it starts to sell. It's sold above the Asian Open. Not a coincidence. So these things you will pick up over time as you just study the kill zones over and over and over again. Just mark out the opening price. It puts you on the right side if you're looking for a long or a short. If you were looking for longs, it would have to be below the Asian Open. And it was. It was short lived. It didn't continue trending to those buy side liquidity pools that we were projecting it to draw to. It didn't, in this example at least, but it still gave us a feasible trade idea. It would have been nice, of course, to see it go up that high, but here it got stopped out. So, all in all, pay the trader. Hopefully, you found this episode informative. This was episode 44. Peace.